Good morning and welcome to Equity Story Trade Watch, the 26th of April, a Wednesday, of course, in the middle of the week, hump day. And I'm here with Claude. So welcome, Claude. We had a nice Anzac day yesterday, a little bit of a break, which thank God for me, I needed a bit of a sleep in. However, I didn't sleep in at all, Claude, because I went actually to the dawn services. Very good of me to support the diggers. So I slept late down the track on the day. But anyway, it was a great day. But what happened last night on the US market wasn't a great day. That was all down on the Nasdaq and it was down on the Dow, which means that we started the week this morning. However, there's a little bit of green maybe shoots for tomorrow, where we've got Google reported okayish and Microsoft actually reported extremely well last night. I'm not sure if you saw that, Claude, but that's up about 9% post close of the market, so after market hours. So that's almost, I think, matching up at about $300, which is good. I think the key again was they upgraded the guidance and the AI was driving the growth, which is quite nice. So it just shows, I think maybe the thesis of AI and Microsoft is a strong one for a long, long time. So I'm happy to be there. I've actually owned some Microsoft shares personally. So it's been, I think, one of our hot stocks as well, Claude, on Einstein's, and I think that's going quite well. So I'm happy with that one. Overall.
I own that one as well, Peter. Just bought recently in September, in February this year, off the back of their, AI stuff. I thought, probably definitely time to get on board Microsoft now.
Rightio. Now, of course, I didn't mention even Equity Story, the disclaimer, but here it is in front of you, of course. So any stock we talk about, like we did with Microsoft, it is going to be just charting and fundamentals only, which actually, let me put on the chart of Microsoft so we can have a quick look and you can see exactly why we think this is one of the better stories in the US. So that should go to charting here. Oops, let's go to charting. And you can see for yourself. Now, the other thing I'm going to do is I'm going to run through some of these announcements this morning that we had. I think there's a few of them, but most of the charts are not looking great. So we're going to run through them pretty quickly. And I will show you maybe a couple of that. Okay. All right. So let's go Microsoft, MSFT. And you've got right in front of you Microsoft charts. Just come back a little bit with the markets a little bit up, but now it's matching up almost $300, and potentially you could see that big jump the previous quarter, or I think maybe even the previous update. Then it had the full back of the profit taking is probably not going to start going up again. So that looks like a very good chart actually. I don't mind this at all. Probably give you an opportunity to get in again around this 275. So we'll see how we go mid of the week. So probably wait till the week anyway. But if you've got it, it's a hold technically. And obviously now fundamentally it's another for me nail that I'm thinking this is going to be a long-term hold. All right, let's go through some of these announcements. Mineral resources, that looks actually like a sell for me because charting wise it looks ugly. Wasn't a great update today from mineral resources. Two things out of there that stood out was the lithium side of things weren't fantastic. And the mining services look like they had to revise guidance on that. So that's ugly, looking down, possibly back to that even $63.
Could this be a canary in the coal mine for the mining services and those kind of cyclical companies, do you reckon?
Claude, that's exactly what I was thinking about it when I saw that announcement. And I'm thinking maybe it is time to take some profits on some of these mining services companies because that potentially is the canary in the coal mine. And if the big boys are struggling to maybe get some contract wins, then maybe there's going to be obviously a follow-through effect on some of the smaller players for sure. So yeah, I'm definitely watching this one with interest and watching the other share prices that we've got to see actually what they're going on. But that's a sell technically. I don't think I'll even wait till the end of the week, to be honest. Wednesday, I don't think that will recover. But look, at the end of the day, going by the book, you probably want to wait till the week to see how they go. But on a downgrade, I think normally I just sell. Doesn't matter if it's the start of the week, at the end of the week, I'm out. All right, next one, VEA. This one's actually a good one. So this one is part of our dividend portfolio, and it's delivered okay. It's up, let me see daily today. Let's have a look what they've done today. But during the week is up 2%. Even today looks pretty good. It's up above the trend. So overall looks decent, but it's all about the actual dividends. So can't be negative on this one at all. It's actually quite good. SGP, probably one of the few real estate type companies, REITs, that are doing quite well. So they reiterated their guidance today. You can see the chart looking pretty good. I'm nervous about the real estate market, Claude. So, I'm really don't want to be in any of these stories, but you can't really argue with that. That's still holding quite well. They reiterated the guidance. It looks okay. So maybe not everything's spread equal in that space. So if you are holding something for the dividends or because you like it, then maybe Stockland is one of them that you can definitely hold. All right, let's go with FCL quarterly. Come out, because I know that a couple of our members are holding this story as well. So it's had a good run from that $1 almost, recovered back above the trend, but it just can't go on with it. This quarterly was okay-ish by my books, but obviously profit taking, that's what had happened. So you had that big run and just sell with the facts pretty much on that. So for me,
yeah, I think it's fair to say that this was an improved quarterly off, and also, once again, you're seeing that director buying, insider buying coming in previously, and then now an improved quarterly. It's good to see. But yeah, profit taking does make sense as well.
Yeah, so I think technically can hold or maybe take some profits. But yeah, I wouldn't be buying it for sure, technically.
They were free cash flow positive for the first time in a while, I think. And
significantly as well, by the way, I think I've got to look.
Yeah, obviously these guys can be quite lumpy, and certainly their receipts were lumpy. So I wouldn't necessarily assume it's going to be like that in the next quarter.
But I think that the run of the share price probably indicated that it was going to be a decent quarterly, and I think that's what we saw there.
Yeah.
All right, let's go to the next one. So FCL, I saw some Kogan report saying that I think that had the third quarterly in a month, so in a row, that they've been EBITDA positive. And while the charts recovered incredibly well today, is up 15%. I'm still not touching this in this market. In what we've got a fairly tough retail environment, I think it's not going to be one that I want to touch right now because they're still unprofitable. And really, at the end of the day, they've just said in that announcement that the retail conditions are actually softening. So why would you be touching that? I don't understand. Even though they might have beaten expectations, right? Or probably pretty low expectations, and the market sort of celebrating its announcement today, when they sort of guide you that there's a softening of retail space, and maybe it's not an easy market for them to actually operate it right now.
No. Yeah, it's definitely it's good to see their balance sheet strengthen up. I'll say that as a positive for sure. Yep. But the actual adjusted EBIT was only break even. So you're still essentially on the sort of like quasi infinite PE multiple. So this is definitely not the high qualityest retailer. Don't forget, a lot of the quality of Amazon comes from being the biggest worldwide, not just the biggest in a little country. And also from its other services, like, Amazon Web Services, for example, is a huge growth center for Amazon. So, don't look at Kogan and think, oh, this is like, a global blue chip, because it's tiny compared to Amazon.
It's nothing like an Amazon.
Yeah.
But there is probably a niche for it here in Australia, which obviously has shown that they've got some sort of market share in this space. But right now, I just think it's still fairly mixed for me, bit of a basket case still for me. And I still want to probably see another, at least probably 6 to 12 months of recovery before I actually get even interested in this. All right, let's go to the next one. Sonic Healthcare had come up with an acquisition in Germany today. So they had a pretty good recovery. That update that they come up with February really reversed its course, really, because everyone's thinking, post-COVID, the numbers are looking going down and down and down. But actually, when you readjust post-COVID, it's actually looking pretty good, better than people expected significantly, I think. And it's sort of shown it on the recovery. Had a bit of profit taking this week. Understandably, they had an acquisition today, which is that's what they live by with the growth, part of the growth strategy.
in Germany there. So they're building out a business there. They've had 2 recent acquisitions in Germany.
Yeah, and Germany's a pretty good, market to operate in. So I've got no problem with that. Overall, still, good blue chip overall for those investors that love those long-term stories. So I've got no problems with that. So technically a hold. Would I be buying it? Probably not. Probably want to see it back to 34, maybe bounce off and buy it then.
Yeah, it can get sold off from time to time, which can be a good time to buy it. But I agree, this is like a long-term blue chip hold.
Yeah. All right. Thank you for that. Last one I've got is DVP. And this one again, maybe looking like a sell, or maybe you can just give it the end of the week, of course, because it hasn't crashed through. But they're quarterly. It's again good and bad. So the good is they're progressing, and they're moving along with developing the BGL or Bellevue Gold Mine, and progressing their Woodlawn mine as well. So from that point of view, it's good. Again, I think there's a little bit in there with the mining services, Claude, that I'm worried about, because they're now expanded their horizons. So maybe there's a reflection on the mining services that maybe the time is up for some of these things. So we'll see. Like I said, I'm not panicking with this one yet. The guy, Bill Beament, is of course a genius. So you have to sort of respect him and what he's trying to do here. So he's still on target for his 5-year plan that he's got. So like I said, wait till the end of the week, see where it's at. But if you're strictly looking at CTM, if it's like this end of the week, it's a sell. Otherwise, we'll see. Please do not panic yet. All right, let's move on to our thought of the week. And I know last week we're talking about what I thought. Well, the topic was, what do you think is going to report well? This time around, I've got a question for you, which is, what reported well that really stood out to you, right? That's what we're looking at. We're probably going to do the same thing next week. So I know you picked a story that I really hold dearly to my heart. So thank you for that. And I've got something that we've talked about before, but really I'm going to reiterate it again because I'll give you some reasons why I think it's still a good buy. All right. I'll start with you, Claude, because I know you've been sitting there going, he's just, keeps talking and talking and talking.
Not at all.
So anyway, please tell me your story and tell me why you like it and why.
Right, so my standout favorite quarterly so far has been Drop Street, DSE.
Mm-hmm.
And look, the reason for this is if you chart just say the quarterly results for Drop Street, over you're just looking at that operating cash flow, you're going to see that in 2020 March was very weak, and then actually it was all right in 2021. In 2022, March was very weak, easily the weakest quarter. And then, so I thought, maybe this is going to be a kind of weak quarter this March. And actually it's come in with a narrow operating cash flow surplus. Now, the June quarter in the last few years has only ever sort of once been like, about the same as the March quarter. Generally speaking, the March quarter is a weaker quarter because they pay their staff performance bonuses in that quarter. So it's not guaranteed to be the weakest quarter, but usually it has a bit of a headwind in the operating cash flow. So the fact that it came in positive in its weakest quarter, traditionally weakest quarter, and on top of that, that now makes it 4 quarters of operating cash flow positive. And these guys are very good, and they do not capitalize much, if anything, in terms of software spend or development spend. So the operating cash flow is a proxy for free cash flow, more or less. And yeah, now it looks like it. I think with 4 positive ones, you could really start to have a bit more confidence that it remains cash flow positive. And on top of that, on the conference call, the CEO said, we don't want to take the company back to cash flow negative. And in particular, he said that he did not want to make any kind of acquisition that would bring it back to cash flow negative. And that was a major risk that I was worried about, that they would make an acquisition that was loss making, and then their journey to cash flow positive, which had taken a couple of years to play out, which you've roughly seen. The share price sort of got up to above around 20 cents and then sort of stayed there for a year, as it's now like lapped it and showed that it can stay cash flow positive. And yeah, now look, there are other companies that I've bought when they've been on the verge of becoming cash flow positive, which I regret buying just as they started to. I wish I'd given them a little bit more time to prove that they can go through a full year with cash flow positive. I believe Dropsuite really has done that now. They've done 4 quarters, all cash flow positive. And on top of that, they've still got net cash. And yes, the PE ratio is like 100 or thereabouts. So it's still a high risk growth stock in that regard. But we also see growth keeping up, and they're actually targeting revenue growth of 40 to 50%. And based on their ARR growth, they're doing that. They're doing 40% plus revenue growth at the moment, it would appear. Now that may fall down, that may slow down at any given time. So it's not guaranteed going forward. But right now, I believe the market is quite understandably saying, well, we expect growth to come down fairly soon. But given these guys have a capital light business model where I don't like, generally speaking, the reseller model, because it means you get lower margins, and indeed Dropsuite does have lower margins. However, the good part of it is that you can grow quite quickly if you are growing your number of partnerships, and they're also growing their number of clients. So you have other people sort of working to sell your product for you. So that's why it is actually possible they could maintain 40% growth over the next year or even a little bit longer. And if they maintain the margins and they maintain, then they're going to see that profitability. Best case scenario, they maintain margins, profitability starts ticking up as you get operating leverage. Worst case scenario, probably at this point they remain cash flow positive, but they spend on growth, and so you don't see that profit come through. That would be disappointing, but not terrible, given that they are currently sustainable.
Yeah. So obviously you are very impressed with the strong March quarter, because usually it's just been probably not the best quarter.
I mean, part of it also is, as you know, we've talked about this one a lot, and I've basically been in favor of it as well, saying, yeah, look, it's good. I don't have it yet myself, but I quite like it. And honestly, obviously I should have probably pulled the trigger at some point, when we're having those conversations. However, I just used this quarterly as a bit of a wake up call. You could still buy it at 23 cents when the quarterly came out. So for me, that was the buy signal there. Yeah, could have got it at 21 cents, 22 cents. If I'd nailed it, maybe 18 cents. So not perfect, but I'll still take it because I think it looks good. And also, I have much more confidence now in management, because they talk, we've seen them, as you said to me previously, they've done what they said they're going to do. And as you build up that trust in management, ultimately that is what you're looking for, especially in a long-term holding. If there's no trust in management, you don't want to be long-term thesis investing in that.
Yeah, I agree. And I think you're absolutely right. Buying at 21 or 23 or 24 cents, if you got that little bit on a longer term view on this, probably doesn't matter. Whether you pick it up at 21 or 23 or 24 cents, you still should make money as long as they deliver on the strategy. And like I said, I've been following the stock for quite some time, and I just obviously disclaimer from my point of view is we've got holders in the fund. It's actually the biggest holding in the fund. So I obviously was pretty relieved to see that the quarterly was pretty good and starting to move a little bit. But you know what? I'm still not selling this. This is just a real good story that I just think it's got a long runway, as long as, because like you said, it's a fairly simple business model, right? Capital light. They've got a product that's really in demand. Everyone should be backing up the data. Doesn't matter if there's a million of these companies out there, they're still going to find a little niche, and they're still going to have clients, and they're still going to probably grow and, eke out that nice growth over the next, hopefully, medium period type stuff. So I'm happy with that, the very new products. And, again, from the point of view of acquisitions, I love that they actually grew everything, that the growth that we've seen over the last 3 or 4 years, it's all been organic. So for them to just be focusing on acquisition and reiterate that they want to make it right is very encouraging for me. And because I was scared, I think that's what the price maybe was sort of under wraps a bit, because people were scared that they're going to come up with something crazy and stuff up that positive cash flows that they've had. So if they're talking the talk that it's going to be cash flow positive or maybe even profitable, God knows, right? Then definitely much more much more easy for me to actually own this story for a little bit longer. So yeah, I'm holding.
For my style of investment, you really need to find those long-term holdable growth stories, because when you do have the organic growth that does go on for years, that's when the results in terms of the share price can really exceed what you would think that's sort of going to be likely. And yeah, these guys are showing that they're in it to win it. The thing that has me nervous is whether they let that, whether they let that come through as profit or whether they keep reinvesting all of it. That's the risk there.
Yeah, I agree. And look, this is not cyclical. This is just going to go forever because everyone needs to protect their own data. We've seen it, right? Cybersecurity is one of the keys here that it's just not going to go away. All right, so let's move on to my story. And look, I went through, there's a few updates reports that did a great job, mind you. And like I said, I could have chosen a number of stories like an XRF, like a Duratech, like BSL, maybe SDF. There's a number of stories there, BXB, but I went through the old favorites, LAU. And I'll tell you the reason why. It's just very simple reason why. It's still the cheapest of all the upgrade stocks that I've went through. So I went through Duratech. It's trading on about now with the upgrade that I've seen recently. So I went through the numbers quickly. It's trading on about, and this I'm looking at the conservative stuff. So it's trading on about 16.6 times. I looked at XRF, it's trading on about 40 times with the upgrades, right? Or the strong updates. But LAU, on the lowest part of the upgrade that they've come out recently, they're only trading on 15.5 times, which is still decent. It's not super cheap like they was, 11, 12 times that they had maybe three months ago. But, they're just in a sweet spot at the moment. And the latest update was really impressive for me. It's just puts them on another 35% growth. They grew 35% in FY22. So that's the second year of potentially 35% growth in a row. That gives you more confidence that these guys are on a roll at the moment, right? And I think when you look at some of the key issues or key risks for me, and one big one is weather events or adverse weather events, seem to be okay for the moment. So that's why they've come up with a positive update and upgrade, which I think it gives me, let me put this on, first of all, the chart. It gives me that confidence. I'm still happy to buy on some weakness whenever it comes through. So that sort of stood out to me. I know I could have, like I said, I could have chosen a number of stocks there. And I did really sell it to you guys maybe about 2 months back, saying this is my favorite story.
I remember that.
So I am going quite well, I have to say. But
you did very well on this one. Very good call.
It's just one stock. So look, I expect the technique to come back a bit, right? But like I said, I am not. It has been my favorite, and I'm not going to sell any of it. In fact, I even bought a little bit more at about 115. So like I said, I am still at 15.5 times for FY23. I'm still ready to hold. And I'm thinking FY23 finishes up, right, if they get delivered 35%. I'm looking further now. I'm looking to FY24. And even if I come up with a 10% growth, right, so I'm just going to chop down that growth significantly down, that's going to drop them down because we're pretty much over with FY23. So if you're paying for next year's earnings, probably about 14 times, right? Which is nothing for a company like this. So I'm happy to pay for that sort of growth overall, to be honest. Like I said, it's going to probably the share price will fluctuate, but if you're in there, hold it. If you're not in it, just wait for a bit of a pullback, maybe to that 115, 110, somewhere around that, and buy some on the fundamentals and technicals. So I really like it. Delivered very, very well. Like I said, it is the cheapest I can see an upgrade. However, I've got another story that I'll talk to you about next week. Hopefully they're going to report and we'll have a look at it. So we'll see how we go. So Claude, thank you so much for joining me. I know we're running a little bit late today, so I'm going to get this out as soon as I can. Have a great day, and I'll probably see you on Friday.
You too. Thanks for listening, everyone. And just a quick note: I own shares in Dropspeed now, and I'm still accumulating. So I'm likely to buy more in the coming days, or even today if I get my positions through. So just wanted to disclose that to everyone. I'm in the market there.
Good boy.
Yeah.
For me. All right. Cheers. Thanks, Claude.
Cool.
Have a good day.
Thanks, Peter. Have a good one, everyone. Bye.